And to Joey's point, it is very rare to have a finance person that mix with real estate. And when you have both of those individuals together and they collide, you have a definite powerhouse on your side.
Hello everybody, this is JoeyB. Welcome to my Real Estate 101. I'd like to introduce you to the newest member of the JoeyB team. Her name is Yolanda Jeffries. She just joined us. And Yolanda has got a very good background. She's got an MBA and she also has an accounting degree from Loyola University. Now, good background, she'll tell you a little bit more about it, but she is also 100% involved in real estate. She's a realtor now. She's very active in the Chicago market. She joined the JoeyB team, and one of the first things that we did, and the reason why we're here today, is we looked at one of the greatest classes and one of the best instructors that we have through Renatus. And his name is Jeff Armstrong. And Jeff Armstrong is our seller note broker. He teaches the class. We have 3 8-hour classes on it, on seller note financing, okay? That's where the owner, seller, it is the bank, and they provide the loan to the buyer. Very extensive, and there's a lot into it. And this was Yolanda's sort of first entry to our classes. She's very familiar with seller financing, but we just watched almost 6 hours of Jeff Armstrong, and it was enlightening. Amazing. Enlightening. She's got an MBA, I got an MBA. I've been doing this for 45 years. And guess what? Through the courses here, I learned that there's a secondary market for seller financing.
Yes.
Now, Yolanda is different than most brokers in that she is not only have an accounting degree, she also has an MBA specializing in finance, and she's a number person. So she is somebody that I really believe can develop an unbelievable amount of strength in investment real estate. Now, let me turn it over. Yolanda,
yes.
Welcome to the JoeyB studio over here.
Well, thank you so much, Joey. I'm super excited to be here. As Joey just informed you guys, we had an amazing day. 6 hours of nothing but education, learning about seller financing, which I can tell you guys, it is key. So just a little bit about myself. As Joey mentioned, yes, I am like more than like a numbers queen. And that's what people tend to call me, the numbers queen. I have a MBA in finance and I have a bachelor's in accounting. And to Joey's point, it is very rare to have a finance person that mix with real estate. And when you have both of those individuals together and they collide, you have a definite powerhouse on your side. So again, seller financing is a topic that we're going to talk about today.
Right.
I'm super duper excited about it. It is a secondary market for it, and I can tell you guys, it is another way that you can use other people's money to ensure that you're investing the right way in real estate.
Fantastic. But this is the question that I want to ask you. You're a broker. Okay?
Yes.
This is a loaded question.
Okay.
How hard is it sometimes to get the underwriting, to get people qualified in a savings and loan? Let's assume you got a couple.
Right.
They both have jobs.
Mm-hmm.
They have some money. But how do you see seller financing working as opposed to going to a regular bank or savings and loan?
Seller financing is huge, especially when it comes down to individuals who may be credit challenged, who may have the financial means to be able to afford the home, but just because they have financial difficulties in the past, for some reason the bank is not allowing to move forward with the loan because of credit challenges. And when I tell you seller financing is key, because it allows individuals who may be impacted with credit, who may be facing those credit challenges, an opportunity to find that dream home, fulfill your goals and your dreams for both yourself and your family. So it's huge. It's a different world. So
but this isn't, and I'm sure you got this too, but let me bring it up. This isn't only for the sake of the buyer. It's also for the benefit of the seller.
Absolutely.
Let me give you an example. How many times do you meet people, and I mean elderly people, that have to go through a change where they have to go to a nursing home or they have to go to a retirement home? And what happens? They sell it. If they sell it, guess what? I've been involved in a lot of transactions. All the relatives are in there getting the money, et cetera, et cetera. Here's an advantage for when you deal with an elderly person who owns a house, and they may have a lot of relatives, or they have some people waiting in line that are going to get their inheritance or whatever you want to call it. What if they had to go to a nursing home? Okay, what if they had to go to a senior housing? Now, what if you sold it with using seller financing? Okay, you got the down payment, 10%, 20%, or whatever, and then they were getting their mortgage payments every month. Could be for 30 years, could be 30 years with a 7-year balloon. But the person that has to go, the elderly person, grandpa, grandma, or both, or whatever, they could have a stream of income coming in that could help pay for the nursing home that they're in.
Yes.
Now, address this from a brokerage standpoint, how you could see it.
So I can see this working to the true benefit from the seller perspective, because if you have a home and say, life does happen, if you do go through, some situations, whether it's financial or if it's health related, this gives you an additional opportunity to be able to attract a pool of individuals who are looking to purchase a home similar to yours. So it could be a win-win situation, because from a seller perspective, you not only open up the pool of individuals who will be able to now qualify to purchase your home. It gives you that assurance or some sort of like calming mechanism to say that, hey, life is happening, it's impacted me, but I now have an exit strategy. Exactly. I now have a plan.
Exactly. Now, here, and I'd like you to address the balloon payment. There could be a balloon payment part of this. Typically, what we've learned is that a 30-year amortization with a 7-year balloon works. But you can sell the note anytime in the secondary market after it's seasoned. And what is seasoned? One payment?
1 month, yeah.
Yeah, one payment. Obviously, the more payments they make, the more assurances that somebody who buys that note.
Absolutely.
But let's say Grandpa goes in there, okay? And he passes away in 5 years.
Yeah.
They could sell it could be sold right after that, right?
Right, because there's a need, and typically sellers more than likely would need a need. You have to have a need to want to be able to sell. Mm-hmm.
So if they pass away and the heirs want to basically get their inheritance, you could sell it on a secondary market. But here's the key, and I want to ask you. The note has to be structured correctly.
Absolutely.
It has to be almost like using the big word underwriting, just like a bank would do it. Can you address that?
Yes, absolutely. So you want to make sure that the note makes financial sense. So there's several different things that goes into the note to make it viable, especially from a seller's perspective. When it comes down to the interest rate, because you are now positioning yourself as the bank, you want to make sure, and you're working with individuals who may have some credit issues in the past, you want to make sure that when it comes down to the interest rate, that it's an interest rate that's going to be conducive to the property. Typically, the interest rates on seller finance deals, seller finance notes, is around 9%, 9-10%. But again, if the buyers were able to get a better rate, they'll be able to go to the bank, and obviously that's not an option for them right now. So to make the numbers work, and again, like I said, it has to make financial sense. There are certain things that has to go into it. A second component would be making sure that the payments extend out for at least 7 years. You want to make sure that you have that balloon payment in there for at least 7 years. Anything less than that, it could be a little challenging or a little risky. So you want to make sure that you cover that aspect as well.
Okay. And then, as I brought up, you're the bank, and it's not just saying you're the bank. What would a bank require? An appraisal.
Yes.
Okay. What would the bank require too? A credit
report.
Okay. What else would the bank? Maybe an inspection, right? Maybe a home inspection.
Yeah.
So what we learned is that if you're going to be the bank, act like the bank.
Right.
And the reason you want an appraisal, a credit report, you want a home inspection, if you have those, the person that is going to buy the note, the person that may buy the note, there'll be a broker involved. There'll probably be somebody that's involved with us in Renatus, Jeff Armstrong. He's the 4th largest note broker in the United States, and the other 3 are hedge funds. And he's a one-man shop working out of Arizona, okay? But if you want to be the bank, act like the bank. And the greater you do your due diligence, you the broker, you help the seller do the due diligence by guiding him with this, guiding him with that, guiding him, telling him to get it. Therefore, you'll have a nice little package that when you do have to, if you do want to sell the note, you could collect it for 30 years, or you could collect it on an amortization for 30 years and then pay it off in 5 years, 7 years, whenever the balloon is. But if you want to sell it in that time period to a third party, they want to know they're buying a secure investment. The seasoning, right?
Yep.
The payments have been made.
Yep.
2, all the rest of them that they could say, hey, look, we did our due diligence, we showed it, and this could be a secure loan, so they can calculate the rate of return, their investment rate, and whatever the current market rate is, 11%, 8%, 9%, whatever. Right. And but your experience as a realtor, can you bring up any ideas where you thought this would have worked if you would have?
Absolutely. Like, for example, I have a listing. It had a couple listings where it was on the market. It's been on the market for a while. And not to say that it's just a listing. It's just not like I'm doing a bad job as a real estate agent. It just won't sell. It could be the timing when the listing went onto the market. It just could be the buyers just in that area is just not really, attracted to the property. But again, when you're marketing the property, you have not received like the hits or the feedback that you need in order to get that property sold, you have to be able to add in additional strategies to that. And I think with the seller financing, because I've had some, like I said, I had listings that have taken a long time to get to the closing point or get to under contract, and those listings expired. That's the last thing that you want to have to happen to you as a real estate agent, is to have a listing expire on you or a listing cancel. In those situations, if I had the option, utilize this seller finance strategy, okay, well, since the property was not sold on the open market, right, maybe there's an opportunity to attract buyers who are still interested into this property through a seller financing opportunity.
Absolutely.
So that actually gives a second option, second strategy for my seller clients, like, hey, here's another way that we can go about to ensure that you meet your goal, which is selling your property,
right?
And a buyer reach their goal of making their dreams come true.
Absolutely, absolutely. Now, hey, one last thing over here. Yolanda's part of our team over here, but she has, can you give us your phone number and your website and whatever so people can contact you? Instead of going through me, they could go directly to you. How's
exactly.
that?
You can come straight to me. I am Realtor Yolanda J. Yolanda Jeffries. I'm with Berkshire Hathaway. I can be reached by phone at 773-720-2030. You can follow me on social media. I am at Realtor Yolanda J on Instagram. You can follow me on Facebook. I'm under Ladies of Luxury Real Estate Group for Berkshire Hathaway on Facebook. Yeah, that's it.
All right. Well, listen. Hey, if you learned something over here, like it, share it, and subscribe. And then stay tuned because you want to give me a hint what we're going to talk about? I'll give you a hint. Next time we're together, we're probably going to be telling you about another strategy, and it's called lease option.
Yes.
Okay, stay tuned. All right, thank you very much. Hey, my friend. Hey, thank you for watching Real Estate Investing Mantra. If you liked it, like it, share it, and subscribe. We've got a lot more stuff coming down the pike. Thank you.